To discuss the results, we have with us MD and CEO, Mr. Jonathan. Welcome to the show.
Nice to see you.
So we have seen companies' discovery services, being impacted due to US biotech funding, but we were expecting, or we were seeing some improvement last quarter. So just wanted to understand what is the current situation?
Yeah, sure. Well, actually, I mean, the quarter came in a little bit weaker than we would have hoped for, but compared to our normal performance. But if you actually look at it more broadly, exactly what we expected. We guided the market at the beginning of the year. We thought the first half would be flattish, and then we would see a lot more growth momentum in the second half of this fiscal year. And that seems to be exactly as it's playing out. I think the market characteristics, what's going on the demand side, pretty well understood. It's been a tough 18 months in the US for biotech funding. That now seems to be regaining and rebounding. So they had a really good first quarter of new capital raising. And then it takes a while for that capital, as it's been raised, to get spent in the outsourcing market. And that's really what we're predicting for the rest of the year, is that we'll see that sequential improvement in expenditure by our clients, and that should be driving growth for us. That should get better as we go sequentially through the year. So a little bit of a tough start to the year, just in line with what we expected, certainly to what the street expected to see. And then as we go through the year, I would expect to see a sequentially better performance, and certainly the second half of the year looks as though we should see some good growth.
So that means that H2 FY25 we'll see double-digit growth, because according to your guidance that you've given?
Yeah, mathematically that's right. Yeah.
Also, this time, if you see the margins were 22% versus 26% last year. Now, what increase in expense have led to these margins, and where we can see this margin going ahead, considering the operational efficiencies that Syngene has?
Yeah, super. The margin effect really is one of mix, actually. It's not so much about the expenditure in the cost base. It's much more around the reshaping of our organization. As you know, we took a strategic decision some years ago to add to our research services business and become a development manufacturing business alongside that. So it's a twin engine strategy. And we're seeing good growth in our biologics manufacturing division. And of course, biologics manufacturing has a much higher raw material component, and that's then flowing through the gross margin level. So there's a little bit of mix in there. The EBITDA and the operating margins tends to fluctuate through the year, but we're on track, I think, for a good end to the year. We're expecting margins to be in the high 20s on a full year basis.
Okay. Also, I wanted your thoughts on US Biosecure Act. Now, CDMOs based outside China are said to have substantial growth, and how this will be beneficial for Syngene?
Yeah, I think it's an important trend. It's certainly something that we think is going to benefit Syngene. I'd caution people not to think it's all going to happen overnight. I think it's actually such a large opportunity. It'll play out over the next 1, 2, 3, 4, 5 years. The clients that we have, particularly the big pharma companies, they tend to be very measured in their pace of change, but when they make a decision, they come at scale. And that seems to be what's going on at the moment. Lead indicator for us, we've seen a doubling in the number of client visits during the first quarter as they're coming to do research trips, inspection trips, audits, really looking at whether or not we've got the capability that can pick up that opportunity around China. And I think we're well positioned there.
All right. Also, looking ahead to the next 2 to 3 years, if I see, what is our strategy when it comes to our core business across all the 3 segments, and how do we plan, to navigate the challenges which is posed by funding winter in biotech within our geographies?
Yeah, well, I think the biotech piece has rebounded. If you look at the first quarter this year, it was back at pre-pandemic levels in terms of new capital investments going into the US biotech sector. If I remember the numbers correctly, it was the best quarter in about 14 quarters of funding. So that environment looks now to have recovered. Now we've got to wait for that flow through from new capital raising to new expenditure, new deployment in the outsourcing market. And we're predicting that'll be in the second half of this year and then continue into next year. So I think that bit is starting to recover, having what's been quite a tough 18 months. In terms of our own strategy, no change. It's about execution. We're well positioned in research services. We've got, I think, the largest infrastructure here in India. We've got some super modern laboratories. We continue to invest in those. This quarter, we brought online a new chemistry laboratory in Hyderabad. That's state of the art. And then the other part of our business is this growing CDMO manufacturing business. And really there, it's been led by biologics. We did an acquisition last year to buy new capacity. We bought a biologics plant off Stelis Biopharma. We're investing in that, getting it up to the standards that we want, and that's on track to come online towards the end of this fiscal year. So we're new infrastructure, new capacity available, and we're ready to capture that opportunity if it comes.
Also, we've seen tie-ups with Zoetis. Now, how we're going to scale this, and any more, tie-ups lying ahead?
Oh, I hope so. I can't really sort of front run those things, but it's a busy period for our business development people. There's a lot of interest at the moment. If I measure it by the number of requests for information, requests for proposals, we had a very strong first quarter. Now we've got to go and win those mandates, and we've got to turn them into revenue. But the market indicators are looking up.
Also, my last question, before I let you go, this Stelis Biopharma, after the qualification and, after the completion of all the requirements that we are supposed to do, where this going to take your capacity to?
Oh, it's a twofold, threefold increase in available capacity. We were starting to bump up against a barrier, which is we'd fully sold out all of our existing capacity. So we were in danger of having to turn business away if we didn't make this investment. We'd originally planned to do it organically in 2 or 3 years' time, but the opportunity was too good not to bring that forward through the acquisition. So it gives us headroom for growth.
Okay, great. Thank you so much, Mr. Jonathan, for joining us and answering our questions, and all the best for the business.
Thank you.